Trading is a lonely game, so grab a coffee and let's change that. Roll the intro. Don't adjust your radio set, you're right on time. Coming to you from 5 cities, Hot 44 FM, your premier trading show, the Bullish Café. Alright, welcome ladies and gentlemen to the Bullish Café. And thank you for being here. Stick around, you will like it. So, as always, continuing what we built on episode 2, we stopped at the daily final outlook before heading into Wednesday. Important news coming up, so interesting order flow is anticipated. The bias is bearish. The context is from this daily bearish fair value gap as premium to at least this previous daily low as discount. Arguments and how and why, we established that on episode 2 in detail. We locked in the bias, then the context, what comes next, the narrative, and then the entry. Now the narrative is simply how price action should behave when price gets to our context areas. Like premium here at the daily fair value gap, and we're bearish, so what should price do? What candles should form in order for us to confirm that we're heading lower and then sell? The answer is one very specific thing, the reversal model, or the lower time frame reversal model. Now please follow closely what I'm gonna say. And you know what? Come with me to the side. Education. Alright. Now, here's our fixed list of steps towards the trade. We have the bias, so the question is which one, bullish or bearish. Then the context, from where to where. Then the narrative is the how do you imagine this bearishness that you're anticipating? And then the entry, which is click the button man, just do it. And we focus on the narrative now. The narrative is how should price be printed in order to confirm our previous steps, bias and context, and move on to the entry. Very, very crucial. Our reversal model solves it using 3 components. Number 1 is the candle formation. When price reaches that context area to manipulate, area where you expect a reversal, say a fair value gap, a swing high liquidity, a key level. At that exact time, we switch to lower time frame and wait for the following. A lower time frame bullish fair value gap into the premium array. It fails to hold. Then violated by a bearish fair value gap out in the opposite direction of this one. Just by that candle formation, once we see it, we're good to look at the second part, which is the second component, timing. For timing, this arrangement should be anticipated during specific high probability times of the day. London kill zone, New York open, Asian session for some markets, and news hours. So don't go looking for it at irrelevant times. And on top of that, we have the component number 3, which is the midnight open. The midnight level matters because it's the level that logically divides premium of day and discount of day. Premium above, discount below. So this whole deal, this whole setup would be the most efficient above midnight for sells and below midnight for buys. And this, my friends, is the reversal model. It's really nothing fancy. It's just a set of strict rules that help you think as the candles form and looking at the right things. And we make sure that it's as mechanical as it can be without including your emotions and your personal taste. It's very simple. If it happens, we go in. If it doesn't, we don't do nada. And this reversal model, as it is the base of probably 95% of the Bullish Café trading. So no secrets between us. This is what we do. And money is made by consistently using it over the years. So back to our chart. To apply this directly, our context area on daily is this bearish fair value gap. We want price to reach up to it and wait for a reversal model. Are we gonna look at it here? Of course not. We switch to lower time frame for more details. Let's go to 1 hour next. Alright, this is the 1 hour chart. And realistically, we open the shop at London Open. So this is pretty much what we should be looking at. So during Asian session, price did in fact reach up to the daily bearish fair value gap, and to our delight, created a bullish 1 hour fair value gap in the process, as well as this Asian buy-side liquidity. So two conditions are in. We're into the daily bearish fair value gap and a 1 hour bullish fair value gap created, and the timing is good. We're heading into London. Now the third condition remains the midnight open. Let's draw the midnight level. Do you see where it lands? Yep, your most valid, sharply filtered premium array is this buy-side liquidity here. It's above the midnight level, so a very high probability of a sweep on it in manipulation. And there it is. Very good. We are seeing the exact touch on premium, exactly how we wanted it. So now we're good to switch to even lower time frame and apply the same method. And let's do that right now. So once our premium area has been reached with a nice sweep on the hour chart, we switch to the 5 minutes here and we look at the play by play. You can only switch here after confirming your bias, your context, and then watch your final confirmations candle by candle. London session opens. We're looking at our final premium array, this buy-side liquidity above midnight. But look here, price at first did create a bearish fair value gap here. But pay attention, it is not trusted because price hasn't yet reached our premiums. So that was an early trap. Many traders who just heard about fair value gaps somewhere could possibly enter here with a stop loss here. But no, you'll get stopped out. And now it's our time to pay attention because our premium array is reached. Beautiful sweep on the buy-side liquidity, closing below it in respect. Now is a good time to wait for the fair value gap. And there it is. Here it is. You're good. Just click the button. That is it. With this last 5-minute candle close, confirming the 5-minute bearish fair value gap creation, we can enter sell directly here. Stop loss strictly above the last swing high in premium, which is the buy-side liquidity sweep, and we like to aim for 2.28 risk reward. It is based on our statistics over a large number of entries using this strategy. And we run it. And there we go. Entry during London, first expansion lower, beautiful price leg, bearish all session. Next, we had a retracement higher during this interval in between sessions. This interval is usually highly manipulated. It's rarely a good idea to trade during that. Anyways, we had this retracement higher. Where? To the nearest premium array, which is this bearish fair value area right here. At the same time, creating this swing high as internal buy-side liquidity, which is an obvious giveaway for a sweep. Yes, another sweep during New York Open. And sure enough, sweep on that high. Back to our entry point, yes, but not for long. Nothing to worry about. The euro-dollar continued moving lower after that, with the help of news volume, of course. Our take profit is reached during New York. Very efficient, very beautiful. Now let me ask you to visualize the 4 steps we just covered from a blank chart to a trade, and tell me, why do you feel that it's the most mechanical approach possible and that there was absolutely no intervention from our feelings or confusion? Each simple detail gives us a probability, a metric to work with. Stack them together, it gives us just one, a high probability path. It happens, you engage. Something else happens, you step back. Alright. And meanwhile, on GBP USD. Alright, this is the British pound dollar, and we will deal with it exactly the same way we did to euro. And I'll just show you how mechanical our method is, no matter the circumstances. The way you reason the market should be able to be replicated and repeated following the same steps each time, over and over and over. That is how you find consistency and develop an edge. So starting with daily, always with a bearish bias, remember, we're mirroring DXY's bullish outlook, so we're argumenting for sells here. Okay, first, price reached above this old high, right over there. Major buy-side liquidity. It's a premium array and a higher time frame, context high. Next, what did price do? Oh yes, exactly what we studied earlier. You can see price reaching higher time frame premium, creating a daily bullish fair value gap. It failed to hold, then directly violated by what? A new daily fair value gap. Bearish. You see? Fair value gap in and fair value gap out. Yes, our reversal model is in full effect, confirming bearishness. Now, what is our context? The most recent event is reaching higher time frame premium in buy-side liquidity and creating new premium in this daily bearish fair value gap. So the context should be from this fair value gap to the nearest discount arrays. Where is discount? Roll the fib. There it is. This is your price leg. Equilibrium here. Below it is discount. Inside it, the nearest element available is this fair value area. And that is it. That is as far as you can go with your anticipations. This premium to this discount. Next, we need to come up with the narrative. And just like we did on euro, touch into daily bearish fair value gap, then switch to lower time frame, then wait for the reversal model. Yes, we should find something that looks exactly like this. So let's see it. Quickly going over the 1 hour chart, it's the same deal. London Open coming up. You know what to do. Find your premium array above midnight level. Wait for manipulation on it. Watch your reversal model take effect. Lower time frame, fair value gap in, fair value gap out. Entry. From here, we're more interested in the 5 minutes chart to see our plans unfold. Of course, buy side liquidity above midnight level. Here, we work on it as our premium array. Price reaches up. Okay, beautiful 5-minute bullish fair value gap here. For manipulation, be aware, many traders will fall for it and buy in premium. Never buy in premium. Alright, always with the 5-minute bullish fair value gap. Look at how it struggles to push higher. It's just not gonna happen. Doesn't seem to happen. And boom, a new bearish fair value gap created. Here it is. You see it? In, out, in, out. Reversal model completed. You are good to take your trade. What else do you need? You went through all the steps. DXY outlook, weekly bias, daily bearish bias on pound dollar, context from premium to discount, switching to lower time frame upon reaction, timing is in session, lower time frame, reversal model in full effect, everything is aligned. This is our method every single time. And we are watching price run here in position. Beautiful initial bearish expansion during London, this full price leg here. And of course, between London and New York kill zones, this manipulation time interval, price apparently retraces higher. Quite deep to be honest, but in a way, it makes sense. We have this last fair value area here. Price decided to magnet to it and respects it. And New York opens with a nice sweep on that last swing high. And boom, continues lower. And delivers our take profit of 228 RR during session. You see, this New York movement in itself is another trade. However, due to larger volumes during New York, higher chances that you could miss it here on 5 minutes. Look at how late the 5-minute fair value gap appears. Very late. If you're more advanced, you can switch to 1 minute and follow that sweep on the swing high. And I guarantee you, from here, you can switch to lower time frame right now to the 1 minute. You will find a 1 minute reversal model, just like this one. Yes, with a 1 minute fair value gap in and a fair value gap out. But you know what? I'll show it to you. Then wrap up the episode. I'll take you on it. Alright, look closely. I will mark it out here. And let's go see what it looks like in 1 minute. Alright, boom, boom, and boom. Here it is. You see it? Buy side liquidity, a premium array. Exactly when reaching that, we have a fair value gap in and a fair value gap out. Your entry point is exactly after the fair value gap is created. The fair value gap out, of course. And run it. You know, remember the framework is a matter of minutes. Very micro. It's a blink and you miss it type of situation here. Anyways, it's going. And wow, price was in the mood for deep retracements today. No worries. Your stop loss is the safest here above the swing high where we always put it. Then minutes later, it dwindles down again. Strong bearish move. Right? Right. Yeah? Do you see anything familiar? Yes. Once again, even in the middle of this move, price did it again. Tiny buy side liquidity. It's a tiny 1 minute premium. And a tiny reversal model again. You see it over here? In, out. In, out. And another tiny trade. It keeps repeating itself from this 1 minute setup, inside this other 1 minute setup, inside this 5 minute setup, inside this 1 hour context, inside this daily context, where we started with a daily reversal model and ended with a 1-minute reversal model. And I most certainly find that beautiful. Alright, this is gonna be it for today. We will continue on the next episode because of course it's not over, baby. It's never over. So until next time, take it easy. It's just another day at the charts. And we sign off. And back to you, Rico. Do your thing.
Ooh, sweet Mother Teresa. When she walks by me, I thank the Lord I picked this job. This is Hot 44, Vice City's hottest records, and a trading show for some reason.
Low light on your shoulder, silver on your skin. My hand finds your heartbeat, right where the groove begins. You lean and say nothing, just breathe against my neck. Every little sway we take puts my pulse in check. Slow burn in your arms, we don't have to rush this fire. Let the room fade out to the curve of your desire. Just you turning into me while the night's been soft and warm. We're taking all our time. Your perfume and vinyl dancing in the air. You laugh like you trust me, like I've always been there. Your hips ride a rhythm